In the second quarter of 2024, the Malaysian economy advanced by 5.9%. This was supported by higher household spending and amid positive labour market condition and larger policy support, further pickup in export goods and tourist arrival, as well as a robust expansion in investment activities. On a seasonal adjusted quarter-on-quarter basis, GDP show a stronger growth momentum of 2.9%, higher than 1.5% recorded in the first quarter of 2024.
At this level of growth, 5.9%, this is actually the highest since the fourth quarter in 2022, where we recorded 7.4% growth, and that was due to the reopening effect. And we acknowledge that this current growth is driven by a number of positive factors, which I highlighted just now in my presentation. First is surge in investment. We see firm consumption. We see recovering exports, which could still continue into the near term. There was also some base effects actually, because I think last year, second quarter, the growth was 2.8%. However, we are also mindful of the specific one-off factors and risks that could also affect growth in the second half, particularly first in terms of the lag impact of the drier El Nino weather, which peaked in first quarter this year on all palm yields, which could dampen production in the next 3 to 6 months. Second is the scheduled maintenance activities in the oil and gas subsector during the third quarter, which could lead to lower than expected production. And third, in terms of the external shocks in the form of worsening conflicts, supply disruptions, tighter protectionism, and more volatile financial markets. And therefore, we are of the view that growth this year is still firm, and we are comfortable to expect growth that is closer to the upper end of our forecast range of between 4 to 5%. And of course, it's subject to the upside risk and also downside risk. If the upside risk does materialize, of course, it could be around 5 or even higher. But if the downside risk materialize, it will be within that range.